Hi there, good morning. This is the International Day of Yoga on Power Breakfast on CNBC-TV18 in Mumbai. I'm Mangla Malu. With me is Sonal Bhutra. We're celebrating Yoga Day today. Of course, yoga talks about health and fitness and mindfulness. But more importantly, for our markets, let's see what bends forwards and bends backwards, because there was a lot that took place yesterday and there was a bit of a Shirsashan done by if you must, the crude oil prices. So all of that is something that we will be tracking.
Absolutely, a lot of stretches, a lot of poses. But in a short while, we'll also see PM Narendra Modi doing yoga. But for now, let's start off the show with the top headlines. S&P 500 closes at new record as Wall Street bets Fed will lower rates. Dow surges nearly 250 points. Asia, however, treads cautious in early trade.
Crude prices jumped 5% overnight as tensions between Iran and the US rise. US President Donald Trump called Iran's attack on a US surveillance drone a very big mistake.
The minutes of the Monetary Policy Committee show unanimity on rate cut and softening of stance, but Deputy Governor Viral Acharya calls for caution on inflation and says he is voting for a cut with some hesitation.
The NCLT admits SBI's bankruptcy plea against Jet Airways, tells the resolution professional to try and resolve the matter in 3 months. The Jet Airways stock, inexplicably though, soared 90% in late trade before the NCLT order.
And IT companies will be in focus yet again today on reports that United States could squeeze H1B visas issued to India. Indian government says it has no official word from the Trump administration. IT industry body NASSCOM warns that US companies will be the worst hit.
Alright, tensions over oil, and as a result of which the Asian markets are treading water. That's exactly what's taking place. It's a subdued start for Asia as tensions in West Asia flare up. The Nikkei, the Straits, as well as the Korean markets, all of them in the red. Mild weakening seen for the dollar yen from yesterday. However, keep an eye out on what takes place in the SGX Nifty, because remember, yesterday was a good day for the bulls. The Nifty notched up gains of around 140 points. We had a good 420 points gain coming in on the Nifty Bank as well. More importantly, after 12 sessions of weak market breadth, we saw the advances outdo the declines, and that was a positive. Let's see what happens in today's trading session, especially given the fact that we've seen a 5% rise in oil overnight.
All right, let's talk about the US markets. Wall Street ended higher, cheering the possibility of further rate cuts next month. The S&P 500 surged to end at record high, whereas the Dow Jones ended higher by 250 points. The 10-year Treasury yield fell below the 2% mark for the first time since November 2016. CNBC's Eric Shemi gets us a wrap of what all happened on Wall Street.
U.S. stocks finishing higher, the Dow jumping 249 points, the S&P adding 27 and making a new record close, and the Nasdaq higher by 64. Oil prices jumping more than 5% after President Trump tweeted that Iran made a very big mistake for fueling conflict between the U.S. and Iran by shooting down a U.S. military drone. The strained relationship between the nations sending crude prices higher and also sending energy shares higher, like ExxonMobil, Noble Energy, and Devon Energy as well. Slack shares surging 50% in its market debut today on the New York Stock Exchange. The stock under the ticker WORK, opening at $38.50. That's about 50% higher than the reference price of $26 set by the NYSE on Wednesday night. Slack is part of a slew of tech companies to go public this year, including Uber, Lyft, and Pinterest. And shares of cruise operator Carnival fell more than 10% after the company cut its full-year revenue forecast. The company attributing the cut to the Trump administration's new ban on travel to Cuba, among other factors. That's the action from the U.S. market. Back to you in Mumbai.
All right, on that note, let's hear out some expert voices on the possibility of Fed rate cuts going forward.
I think the Fed will cut rates in July. We'll probably do it again in September. And I think it's less because of any real concerns about the economy. I think it's part of very low inflation. That's one of the justifications. I think the Fed is also looking at it to help extend this very nice expansion that we've had. The Fed's Fed funds rate has been above that neutral rate. And every time that has happened in the past, there's been some economic difficulties, 2005 and 6, 2000, and the early 90s. So I think the Fed is looking at some of those things besides the slowdown, the clear slowdown in global growth.
I think the bond market is right, and our view still is that we have a mild US recession in 2020, so we would endorse that kind of move down. The Fed has become more dovish. Investors are now embracing the concept of the liquidity argument. It's about interest rates. That's all that seems to matter. People forget that the reason interest rates are being cut and the reason is the Fed has done this pivot is because global conditions are getting worse, and US conditions, we believe, will get worse. That will impact earnings and ultimately margins as well.
And we're a little bit more cautious looking at U.S. equities hitting all-time highs. We want to go into next week with the G20 summit being a little bit more cautious simply because there's still no resolution on trade. And so the market is behaving as though the Fed is going to be the savior here. But until we get more information about trade and the outcome on trade, that does have the impact to affect corporate earnings and to potentially see a pullback. So we're sitting tight until next week.
We've seen an overabundance of corporate caution here, despite the fact that we do know that the Fed is likely going to move potentially in July. We still think that we need to see some de-escalation in the trade rhetoric and some good old-fashioned earnings growth to actually be able to sustain a rally above 3,000. So we're feeling a little bit cautious here, moving more towards the credit complex than we are in equities.
If you look at financial conditions, they're highly accommodative. Interest rates have come down, mortgage rates have come down. I don't have an opinion here because I'm really trying to figure out what the cost and benefit analysis is here. There is a cost to cutting rates. You're hammering the banking system. You can go down the path of Japan and the European Central Bank. Look at what's happened to the stock indices for banks. They've been hurt. And that affects, in the end, small business operators that are not listed that can't access markets. So at the same time, those that can access markets are seeing low rates driven by the markets. And you have to just weigh the cost and the benefit of what you might do. And I'm just saying right now it's a little confusing. It's not as clear cut, I think, as the markets are discounting for July and for September.
All right, and across the Atlantic in Europe, it was a strong close for the markets as they welcomed Bank of England and Federal Reserve interest rate decisions. Bank of England, remember, has kept the interest rate unchanged, but they've reduced the growth forecast for the next quarter to 0. All three indices end in the green. The DAX actually hit a 9-month high earlier in the session. That was led higher by delivery company Delivery Hero, which was high by about 10% on a stronger guidance. So outperformance coming in from the German index. By and large, central banks across the world striking the dovish note. We spoke with JeanClaude Trichet, who's the former president at the ECB, who said Europe's vulnerability to protectionism is twice as big in the US. Listen in.
For the European, the trade issue is even more important than for the US because we are more open than the US. The vulnerability of the euro area economy to protectionism is, I would say, twice as big as in the US in terms of volume of trade compared to GDP. And also when you see the global value chain, which is incorporated in our own exports and imports. So we are very vulnerable, and that is a point I wanted to mention because the trade quarrel are started and entertained by the United States, and it's a big problem for the global economy, but particularly for Europe.
All right, let's talk about the currency space then. The US dollar sank against major currencies, putting it on track for its biggest two-day drop in a year after the Federal Reserve signaled it was ready to cut interest rates as early as next month.
In the world of commodities, meanwhile, oil prices spike as tensions in West Asia continue to heat up after an Iranian missile shot down an unmanned US surveillance drone on Thursday. That followed attacks on tankers in the Gulf of Oman last week. Crude prices soared after US President Donald Trump said Iran made a very big mistake. In fact, Trump later added that the public will find out about whether the US plans to retaliate with a military strike, but he says he finds hard to believe it was intentional. Listen in.
And I think probably Iran made a mistake. I would imagine it was a general or somebody that made a mistake in shooting that drone down. And fortunately, that drone was unarmed. There was no man in it, and it was over international waters, clearly over international waters, but we didn't have a man or woman in the drone. I think that it could have been somebody who was loose and stupid that did it.
Jeffrey Curry, Global Head of Commodities Research at Goldman Sachs, says there is more upside to the crude prices and it is not just impacted because of geopolitics. Listen in.
The world is a very different place today in terms of thinking about geopolitical risk than it was 5-10 years ago. First, all the oil, or at least Iranian exports, are already off the market. If anything, if you had an outbreak of war, they could get out of the sanctions and start exporting, so it could be modestly bearish. The second thing is you got the responsiveness of shale. It's fast cycle production. Prices go too high and you don't get an outbreak or any kind of disruption. You got too much supply. And the other issue is, why did the Fed cut? The global economy is a lot more fragile in terms of thinking about a price spike today than at other points in time. So you put it together, our forecast is 65 on Brent. We're trading around 64.
All right, meanwhile, we're getting pictures of Prime Minister Narendra Modi performing yoga at Ranchi as we celebrate the International Yoga Day. He does that amongst a lot of people out there at a stadium in Ranchi celebrating the International Yoga Day. So we'll keep watching this.
श्वास छोड़ते हुए सिर को धीरे से आगे झुकाए, श्वास भरते हुए सिर को पीछे ले जाए.
All right, so that was Prime Minister Narendra Modi celebrating the International Yoga Day. In fact, it's not just him. We all are celebrating the International Yoga Day. Here is Malaika Arora with a new asana, Chakrasana. Take a look.
We have gorgeous and super fit Malaika Arora with us today. She has set up her own Diva Yoga studio, which is specifically for women. So third is completely stretched me out and I'm feeling awesome. Her instructions were amazing, just like a yoga teacher. So thank you so much. Thanks for sharing these everyday asanas with us.
My pleasure. Thank you so much for coming to our Diva Yoga studio.
Back here watching Power Breakfast. Well, let's talk about our own markets on Dalal Street. It was a good show. In fact, the Nifty and the Sensex, they surged and closed higher, about around 140 points on the Nifty, and Sensex was also high about 500 points. In fact, the mid-cap and the banking index also did really well. Ekta Batra joins in to get us all the market cues we need to know for trade this morning.
Hi Sonal, well morning. For the markets for yesterday, in fact, there was quite a clawback that we saw for the markets. So the Nifty managed to end above 11,800. We had the mid-cap index which outperformed, and a lot of the vulnerable leverage stocks gained yesterday. So for example, Jet, Rel Infra, Rel Cap, DHFL, Yes Bank, India Bulls Housing Finance, all of these stocks were higher. In terms of the FII flows, June has been overall a very volatile month in terms of flows. For yesterday, it was one of the largest sell figures that we saw from the FII's table for June. So FII's net sold around 438 odd crores, DII's net bought around 1241 crores. Don't know if there's any sort of exceptional to this particular figure. In terms of the volatility, just want to point out of 13 sessions in June, FIIs have sold in 8 of them, and out of 13 sessions in June, DIIs have sold in 7 of them. So you can see the kind of volatility influence that we've had. Now, in terms of cues to watch out for the follow-on buying in vulnerable counters, or was it just a dead cat bounce that we saw yesterday? US markets closed higher, so that was positive after the US Fed Reserve comments have really boosted sentiment in terms of what we could expect from the Fed going forward in terms of rate cuts. Asia is largely in the red at this point in time, and we have the SGX, which is a bit flat as well. One of the key factors to watch out for our markets would definitely be the geopolitical risk which is emerging between the US and Iran, and the direct impact that we're seeing on crude prices, because we have Brent crude which is now risen to $64 per barrel, so that, or 65 almost, in terms of the price right now. MPC minutes are nothing really great except for the fact that the growth worries resulted in a rate cut. G20 meeting is on the 28th of June, budget is on the 5th of July. We'd be watching out for that. And also in terms of levels, the 50-day moving average would probably be one of the near-term support levels on the downside.
Ekta, thanks a lot for that. Individual stocks that you're watching?
Well, in terms of individual stocks that I'm watching at this point, I'll start with Jet, where NCLT has admitted SBI's plea to initiate the insolvency proceedings with regards to Jet. Andhra Bank, there's going to be a board meet on the 25th of June to consider capital raising. Vadilal Industries, there have been 2 independent directors who've tendered their resignation. Bombay Dyeing, the CFO, has tendered his resignation there. Everready, lenders have invoked 1.9% promoter pledge stake as of June 11th, and we have Tata Motors, where Moody's has cut the senior unsecured instruments rating. Mindtree also has appointed L&T MD and CEO as a non-executive director, so that should be in focus. Maruti Desire is now compliant with the AIS 145 safety norm, so there's been a price adjustment as well. Ajanta Pharma, release of pledged shares on 1.95% of equity. Balaji Telefilms, they've completed sale of rights of upcoming 4 movies for over 100 crores, so that would be important for them. And McLeod Russell, they've postponed their board meeting to 28th of June from 21st for their Q4 numbers. So obviously not going to go down well with the street.
Absolutely, Ekta. Thanks a lot for all those stocks that we need to watch out for. But she was also talking about the minutes of the Monetary Policy Committee that showed unanimity on rate cut and softening of stance. But the Deputy Governor, Viral Acharya, has called for caution on inflation and has said that he was voting for a cut with some hesitation. Ekta, what are the other details?
Well, overall, yes, there is that growth bias which has come out within the MPC minutes, which is quite clear at this point in time. But while there is a decisive move towards growth, like you mentioned, there was some amount of cautious statements which came out from the likes of Dr. Viral Acharya, who, and I quote in the MPC minutes, said, "I vote, albeit with some hesitation, to front-load the policy rates from 6 to 5.75%. And this would provide an insurance to help prevent the output gap from widening further, or the finance neutral output gap from turning negative. But the MPC will have to remain on guard and be prepared to provide such insurance in a symmetric manner if upside risks to inflation were to materialize." Dr. Viral Acharya's MPC minutes in this policy, in fact, were the largest in amongst all of the constituents, and in fact he's also quoted Ernest Hemingway in his speech. But otherwise, separately, the others such as Dr. Shaktikanta Das said that in some growth impulses have been clearly weakened. So while the headline inflation trajectory is projected to be below 4%, even after considering the expected transmission, keeping in view the evolving growth inflation dynamics, there's a need for decisive monetary policy action at this point in time. So that was those were the 2 main constituents. We had Dr. Pami Dua, Chetan Ghate, who were obviously comfortable with inflation and not so comfortable with growth. Dr. Dholakia seemed to be the most bullish. His concerns about fiscal slippage, according to him, were overdone at this point in time, both misconceived and misconstrued. And Dr. Patra also said that this is just monetary policy is just one of the steps to lead growth back into decisive territory, and there need to be other steps to support it as well.
Ekta, thanks a lot for that. We'll definitely keep an eye out on how this pans out. With that, we'll step into a short break. Come back, we talk about Jet Airways. The NCLT has admitted the State Bank of India. Good morning, you're watching Power Breakfast on CNBC-TV18. The NCLT has admitted the State Bank of India's bankruptcy plea against Jet Airways. The tribunal has told the resolution professional to try and resolve the matter in 3 months. Remember, the SBI had moved the NCLT on behalf of jet lenders after the banks did not receive any acceptable offer for the now defunct airline. Yash Jain was tracking the story and the hearing at the NCLT. Joins us now. Yash, what next?
So Mangalam, of course, yesterday was a very important day, and that is because the NCLT, or the National Company Law Tribunal, admitted State Bank of India's insolvency plea against Jet Airways. What that means is that insolvency proceeding against Jet Airways has started just after that court order yesterday. Essentially, as far as the instructions from the court are concerned, the court has instructed the IRP, which is the Insolvency Resolution Professional, to try and find a resolution to the Jet Airways case within 90 days, that is 3 months, as compared to the 180 days which is given by the IBC, or the Insolvency and Bankruptcy Code normally. That is because the court has cited the Jet Airways matter as a matter of national importance. The court has also asked the IRP to submit a fortnightly progress report on the resolution of Jet Airways to, of course, the National Company Law Tribunal. A moratorium period, interestingly, has been granted for 180 days to safeguard the assets, the existing assets of Jet Airways. Importantly, if you remember, there was an intervention plea also which was filed by a Netherlands-based company saying that a similar insolvency proceeding has been initiated against Jet Airways in Netherlands court. Hence, the insolvency proceeding in India should stop, and the one in Netherlands should be allowed to continue. That plea has been quashed or dismissed by the NCLT yesterday, saying that Netherlands court does not have any jurisdiction when it comes to the companies which have been registered in India. Now, essentially from this point, the point of the case being admitted, all the financial creditors are expected to put their claims with the State Bank of India's insolvency petition. So these financial creditors include banks like Yes Bank, ICICI Bank, Bank of India, Punjab National Bank, all those claims to come in. Operational creditors will also put in their claims, and importantly, the Engineers Association of India as well as the Pilots Association of India, they will also put in the claims from Jet Airways with the main petition of the State Bank of India.
Jet Airways, we have already given the press communique, and we have clarified that under what circumstances the resolution under IBC was the only choice, and there are cogent reasons for what bank or lenders are doing. Every decision is taken after a lot of due deliberation.
Sir, you've been very confident and very categorical that, that would be the last ditch effort. So now that the last ditch effort is there, are you confident that this will go through even here, or is there a possibility of liquidation that you need to prepare for?
Well, let us see. How can I foresee that what will happen in NCL?
I'm sure that there are certain reasons why the court also feels that this could be achievable. There must have been some presentation or some information based on which the court feels that this could be adequate. I can only envisage that there is some plan on hand which the bankers are unable to really articulate as of now, but need certain resolutions to be, or a package to be prepared, get clearance from the different authorities, and maybe through this process it could be expedited.
In fact, there was an interesting move on the Jet stock yesterday. It soared as much as 150% in trade yesterday and closed 90% higher. So the stock will be in focus today as well. Let's see which way it goes. But let's talk about the big story. Here's one development that may not bode well for the Indian IT sector. According to a Reuters report, the United States has informed the Indian government that it was considering imposing a H1B visa cap on countries that force companies to store data locally. The warning comes days before US Secretary of State Mike Pompeo visit to India. He is scheduled to be in India from June 25th to 27th, and according to Reuters, two senior Indian government officials said that they they were briefed last week about the Trump administration's plan. They said that the US government was planning to cap the number of H1B visas issued to Indians to between 10 to 15% of the annual quota. Currently, there is no country-specific limit on the 85,000 H1B work visas granted each year. According to estimates, 70% of the H1B visas are allocated to Indians, and the government says that they have received no official communication from the US government on the issue of the H1B visa cap. We also reached out to Debjani Ghosh, the president of NASSCOM, to understand the impact of the move. If it were to come into effect, what would the impact be on Indian IT companies?
The Indian IT companies take less than 13% of the visas, and that number is going down pretty much every year. In fact, in the last 2 years, it went down by more than 40%, right? Because as the business model is changing, onshoring or being close to the customer is becoming more and more important, right? So what does this mean if it at all happens? Yes, it will impact in some, if the numbers go down and there are less engineers that can get H1B visas, it will impact jobs. More importantly, it will impact innovation because companies that are also taking the highest takers of H1B visas are also the companies in US that invest the most in R&D and innovation.
We have not heard anything officially from the US government on this matter. We remain engaged with the US administration. We remain engaged with the Congress on this issue. The contribution of Indian skilled professional to the growth and development of the US economy, we continue to do that. So to put it in very simple terms, the report which we have seen today in sections of the media, I think they are source-based. We have not heard anything officially from the US government. We continue to reiterate and engage with the US government on this matter.
All right, meanwhile, another stock that will be in focus today is Tata Motors after Moody's has downgraded JLR's corporate credit rating. Sonia Shenoy now joins us with all the details. Sonia.
Well, the concerns that Moody's highlights in their reports is not new. It is well documented. The fact that there's a lot of pressure on the balance sheet. Also, China continues to be a big bother. However, the fact that they've downgraded the corporate credit rating, it will become tougher for Jaguar Land Rover to raise money. Remember, they have a big £4 billion capex each year. And, to execute that, they need to raise money from the foreign markets as well. Now, with this downgrade on their credit rating, that fundraising may become a problem. Now, JLR's credit rating has been downgraded to B1 from BA3. Moody's has also downgraded the instrument rating on bonds to B1 from BA3. The outlook is negative. They say leverage will continue to remain elevated. The debt to EBITDA for Jaguar Land Rover is likely to remain above 5x for both FY20 and FY21. Also, free cash flow will remain negative for FY20 and FY21. And the challenges continue in the Chinese market. For the first time after many years, there was a fall in retail sales in the Chinese market this year, in the month of May, that is. And there are also other risks on the wayside with regards to the no-deal Brexit or the potential US tariffs that continue to remain. Apart from that, ongoing trends in electrification as well as the need to invest in hybrid technology is something that they believe could put additional cost pressure on Jaguar Land Rover, and hence the credit downgrade. All right, Sonia, thanks a lot for joining us and giving us all those details. Let's slip into a short break. But before we do that, here's more from International Yoga Day. Here is Gul Panag with Surya Namaskar. Stay tuned. We'll be right back with more news.
If you follow her on social media platforms, you see her running, working out in a gym, flying a plane, riding a bike and doing many more things. But she also does a lot of yoga. We have Gul Panag with us today. Welcome to CNBC-TV18.
Thank you very much.
How big a part of your life is yoga?
I believe fitness is a combination of strength, flexibility and endurance. And according to me, it's 33.33%.
So share some of your favorite yoga poses that you do on a regular basis.
So I'll start with Surya Namaskars, and I will put my my yoga app on, the workout app, and also show how much the heart rate can go up.
All right, so let's get rolling with the workout.
So let's start.
Yes.
So I'm going to aim for about to get a reasonably elevated heart rate. Let's aim for 20, and the first couple, like 4, 5, will be slow, and then let's try and do them faster.
Done.
My right leg in front, okay, and left leg going back.
Yeah.
And then here. And now my left leg in front and right leg is the back. So my heart rate, now that I've stopped, is coming down to about 110. What are you at?
Same.
A lot of people ask me how to do 100 Surya Namaskars. I break them down mentally into sets of 20. I don't stop, but it's like first set of 20, second set of 20, third set of 20, and then fourth and fifth set of 20. That's an easy
CNBC TV18, and it's an important day of meetings today in the capital. Finance Minister Nirmala Sitharaman is scheduled to meet her state counterparts and hold consultations before the government presents its budget on July 5th. Also on our radar is the 35th GST Council meet scheduled for later today. Timsy is with us, who will take us through the details. Timsy, over to you.
Well, the stage is set for 35th GST Council meeting, which will be the first under the chairmanship of Finance Minister Nirmala Sitharaman. Sitharaman will be meeting firstly the state finance ministers for a pre-budget consultations, after which the same platform will be opened for the GST Council meeting. Sources have told CNBC TV18 that the council is going to consider a whole host of items this time, including fresh proposal for e-ticketing for cinema tickets to curb tax leakages. Council will also discuss the proposal of reducing GST rates on electric vehicles and related supplies from current 12% to 5%. Apart from this, Centre will inform the Council regarding the direction of Delhi High Court to examine the valuation mechanism prescribed for solar power generating systems. Also listed is to consider the recommendations of group of ministers on lottery, where the GM was unable to draw a consensus and has left it for the Council to overcome the differential rate and keep only one rate of either 18% or 28%. The Council will also consider creation of state and area-based benches for GST appellate tribunals and discuss a detailed proposal on introduction of electronic invoicing system to curb tax evasion. The proposal this time is to begin it on a voluntary basis for large taxpayers and in a phased manner make electronic invoicing compulsory for all taxpayers. The Council will also consider an extension for the National Anti-Profiteering Authority, and some of the other items also include consideration of recommendations of Committee of Officers on use of RFID data for strengthening e-way bills, and a look at the fresh demand for the waiver of interest on delayed receipts of advance user charges. Let's see what finally transpires and what is in store for taxpayers. Back to you.
All right, MC, thanks a lot for that. Let's stay with the budget expectations itself. A lower GST, clarity on rules and implementation of much needed policies. These are just a few of the things the auto dealers are looking for as Finance Minister Nirmala Sitharaman readies to present the budget this July. CNBC TV18's Alisha Sachdev have the details.
The government wants India to rank among the world's top 3 manufacturers and exporters of automobiles. That, however, looks tough right now. Dealerships like this one have been reporting a drop in sales for the last 10 months. Add to that the liquidity crunch that the sector is facing, which has led to quite a few of these dealerships shutting shop altogether, especially in metros and tier 2 cities.
Inventories have been given a breather, with many automakers announcing production cuts, but the industry is still staring at a double-digit decline in sales in the near term, as a 20-quarter low in economic growth has meant demand remains muted.
If you look at car sales, till 2014, it always used to grow double the GDP growth. Okay. In last 5 years, if you look at 2014 or 15, 16, 17, 18, generally it has grown at the rate of the GDP growth in India. So last 3 months, if you talk about, the sales are down by roughly 20% at an industry level.
This has many auto dealers hoping that the upcoming budget will bring some relief, starting with goods and services tax.
Currently we do have the GST plus a very complicated method of
the cess, compensation cess. It depends on length of the car, engine size of the car, petrol or diesel, and even the height of the ground clearance. So it makes it actually really very confusing. I fail to understand why should there be so many various heads. I would expect that if the budget can just rationalize this to 1 or 2 different rates, it will be much simpler.
Even though the GST is, strictly speaking, beyond the budget's purview, there is hope that the groundwork for lower rates will be laid, which could fuel some demand. Dealers add that clear policies will also make their lives easier.
Our industry, our automobile, is not who is handling, which ministry is handling. It is industry ministry, it is under transport ministry. We require some franchises law which everywhere in the world are present.
It is very important that vehicles which are pre-BS4, which are the BS3, BS2 or non-BS vehicles, they go off-road. The only way they can go off-road is if there is an incentive given to the owners of these vehicles to scrap these vehicles and only then buy new vehicles.
Dealers also hope there will be measures to clear up the bottlenecks when it comes to financing.
We definitely want that a special package should come in for NBFCs where liquidity is not such a big concern and they can infuse funds in the market and give auto loans the way they were giving pre the ILFS collapse.
Now, a lot of these demands are not new. Auto manufacturers have already made their submissions to the finance minister, but car dealers who have been bearing the brunt of weak demand, rising inventory costs and a financing crunch hope their pain points will be addressed. In Mumbai, this is Sohini Dutt with Alisha Sachdev for CNBC-TV18.
Alright, auto sector continues to be in focus, but there's one more thing in focus, that is International Day of Yoga. And as we slip into a short break, here is more. And my colleague Shibani Gharath is with Miki Mehta. Stay tuned, we will be right back with more.
On a busy, stressful day at work, these are the 2 breathing exercises that you should absolutely do to relieve that stress. Dr. Miki Mehta, what are these 2 breathing exercises?
Breathe in. Mentally, you can imagine everything that you want in life, and mentally, you can literally throw everything out that you don't want.
Welcome back. Now, with less than 2 weeks to go to the Union Budget, we're kicking off our special budget edition, CNBC TV18 Explainers. Today, Kevin Lee, our colleague, breaks down the economic survey and why it is important for you. Take a look.
Every year, a day before the Union Budget, the Ministry of Finance presents the Economic Survey. So it's only fitting that before we tell you all about the Union Budget, we should first break down the Economic Survey and what it means for you. Follow me. There are many ways to get a sense of how the economy is doing. The stock market, for instance. But as much as we love the stock market at CNBC TV18, it is not the authoritative source of data on the Indian economy. No, That honor goes to the Economic Survey. Every year since the 1950s, the Department of Economic Affairs, along with the Finance Ministry, under the guidance of the Chief Economic Advisor, have presented the government view on the state of the economy. In a way, it lays down the context against which the budget is presented every year. The format of the Economic Survey is not set in stone and differs slightly year to year. However, the first chapter of the Economic Survey is normally dedicated to an overview of the economy. How many people are paying taxes? What is the export situation like? Has farmer income gone up? Are social schemes working on ground? Are they having an impact on the gross domestic product? How are the stock markets doing? You see, the economy is a complex, multi-layered thing, and the Economic Survey aims to give a holistic view of all these layers. The Economic Survey can also be prescriptive. For instance, the idea for a universal basic income scheme was first put forth in the Economic Survey of 1617. That same year, the now controversial idea to use RBI's excess capital to resolve bad loans was put forward. Over the last few years, the Economic Survey has also chosen to speak out about current issues like climate change and the gender gap. In 1718, the survey went pink, quite literally, to talk about the need for gender-neutral policies. So while the Economic Survey, like the budget, is a long and fairly detailed document, it talks about more than numbers and can also be prescriptive. This year's Economic Survey may also shed some light on two much talked about issues: GDP growth and unemployment. Concerns have been raised about the data linked to both of these things, and we'll be hoping that the Chief Economic Advisor Krishnamurthy Subramanian shares the government's perspective on these concerns. It's his first economic survey as CEA, and he's an alumnus of IIT Kanpur and the Chicago Booth School, so we're sure he'll be wanting to leave his stamp on the economic survey like his immediate predecessors Arvind Subramanian and Raghuram Rajan.
All right, welcome back. You're watching Power Breakfast on CNBC TV18. Well, one space that will really be in focus is the commodity space. Highs in crude, on other metals. Manisha Gupta joins us with all the update. Hi Manisha, good morning.
Morning, and thank you for that. Well, absolutely. This week is going very, very positive when it comes to commodities as an asset class. Crude, of course, is something that we've been talking about non-stop, gained 5% overnight. The latest trigger, of course, has been Iran shooting down a U.S. military drone. There are fears of military confrontation between U.S. and Iran, which have been rising now. There have been tankers on attack. There have been a lot of verbal rhetoric going on as well. So that is what is adding premium to prices. Remember, 20% of the world output comes from the Middle East, and it is 30% of global oil exports which pass through Strait of Hormuz. So there are a lot of concerns when it comes to supplies, especially arising out of these geopolitics. Apart from that, the macro picture seems to be improving because you are looking at U.S. Fed expectation of an interest rate cut in the next meeting in July. The OPEC meeting on July 1st and 2nd also is expected to put out output policy of withholding output for the rest of 2019. And then the markets are anticipating that the U.S. and China, when they meet at G20 summit, may arrive at some kind of agreement. So the global risk appetite seems to be improving, and that is taking the commodity prices on the higher side. So as you mentioned, it's not just crude, but when you look at the metal prices, we are looking at new highs for iron ore prices. Copper and nickel are trading at a 3-week highs. Even the gold prices, which have been an underperformer for the last couple of years, are now trading at a 5-year highs. We actually have seen the best gains in the last 3 years come in for the gold prices in the last couple of sessions. So commodities, yes, clearly have dropped this week.
All right, definitely commodities have topped the week. We'll keep an eye out on how oil pans out because that will be very important for our own markets. And talking about our own markets, yesterday the Nifty reconquered that 11,800 mark. We ended higher for the Sensex as well as the Nifty Bank as well. And the market breadth, that one was in favor of the advances after 12 sessions of the decliners being more than the advancers. However, despite that, the FIIs, they continue to pull out money from the cash market. So 438 crore pulled out. The domestic institutional investors bought about 1241 crores. At higher levels, above 11,800, even the index futures by the FIIs saw some selling. So close to around 237 crore worth net sales. So that should be a negative 237. There were more shorts added than longs. The Nifty, remember, is very close to the 20-day moving average. So that's the one that should come up for you. 11,867. We're currently at 11,000. 11,831. So let's see whether we face a hurdle out there or not. We started our rally from 11,680 thereabouts, so that's telling you that we are seeking support at lower levels and maybe a bit of a hurdle at the high levels given crude has risen. Next week is the weekly options expiry, rather the monthly options expiry, for which the markers are placed at 11,000 put, 11,700 put and 12,000 call. So that is also telling you that there is a bit of a 300-point range for the Nifty, and yesterday we saw a fair amount of selling at the 11,800 put and the 11,700 put. That's telling you there is support between 11,680 to 11,750. In terms of stocks, Reliance Capital and Gen Irrigation have entered ban. Still in ban are IDBI and Reliance Infra, while out of ban DHFL, Jet Airways and PC Jewelers.
All right, Mangalam, thanks a lot for that. Interesting moves on a lot of these stocks. Let's see which way things go today. But with that, it's a wrap on Power Breakfast. Bazaar Morning Call comes up next. Stay tuned to CNBC TV 18.